Good morning, good afternoon, and good evening, folks, depending on whatever time frame you guys are based in. I am based in London, so good afternoon from myself. I hope everyone is well and safe, and of course your loved ones, especially with the situation, what is going on in Russia and Ukraine. Speaking of that war situation, our particular webinar today is actually going to be more geared on that particular situation. And we will look at companies which are massively involved under the current war situation and how those stocks have performed and where they can really go from here onwards. A bit about myself. I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America. For those of you who are subscribed to our YouTube channel, you or have actually attended our previous Master Series webinars, you would know by now from my voice that this is Naeem Aslam, Chief Market Analyst at AvaTrade. And for those of you who don't, I have given you a very brief history about my experience. And at AvaTrade, I'm head of research as a chief market analyst. So the daily research that you read on our website or throughout the day on various different platforms is done by myself. Now, first things first, and that is first set of questions. Thank you, Henry. Thank you. Henry is asking me that are we going to look at Bitcoin also? We will certainly look at Bitcoin as well, Henry. Just remind me towards the end of this particular webinar in the last 10 minutes or so, and we will spare some time to cover that. Before we do anything else, now given the fact that the people are already asking questions, I believe that everyone can hear me loud and clear, and then you can also see my screen. Is that correct? Just give me yes or no by saying hello, Amutha, hello, Tam Sanku, if I'm pronouncing your name, and everyone else. Now, let's carry on. And thank you for your confirmation, and let's see what is in the store for us today. So just briefly, the risk warnings and disclaimers are in front of you. If you have any questions in relation to that, please feel free to ask your own account managers. Here are the contact details, the Twitter and YouTube. Again, I highly recommend you to follow us on our social media channels, which could be highly beneficial for your own benefit. Now, the agenda for today, for those of you people, I see that a lot of people have joined just now. Today, we are not covering COVID or COVID-19 or the mutation of COVID-19 or the different strains of COVID-19 or the stocks which were influenced or which are still very much influenced by that. But today, in fact, our focus is Russia and Ukraine war. We are focusing on the stocks, on the indices, on the global markets, and of course commodities, which are really very much under focus given the fact what is happening. We will look at the reasons behind them. We will look at the overall performance of the indices. And we will look at which sectors are very much under intense pressure because of what is going on, or which sectors on the other side are performing really well, given the fact that there is a massive concern over the energy sector. So how come that sector is really performing well, and what is next in relation to that? We will cover that. Some of the stocks, some of the sectors that we'll be very much looking at. Of course, it's going to be a lot of interest on the energy and the banking sector. Our conversation is very much going to be based over there. We will also be looking at some online retailers like Walmart, Amazon, eBay, Alibaba. Alibaba obviously doesn't really have too much relation to that, but it is something that we will cover. Pharmaceutical companies, is something, again, how given the fact that we still have that COVID background going on at the back, but the overall sell-off, how that is influencing the pharmaceutical sector, and if they are at a level or at certain levels which makes sense to back some bargains, that would be, or we could consider them as an opportunity on the back of the current sell-off. We will certainly look at that in more detail as well. Companies like Netflix, Disney, and several other companies, even McDonald's, Starbucks, they've announced their departure, or they have stopped their services in Russia. What are the implications of those such reactions on their stock price and how the stock price is performing? We will cover that. So without any further ado, let's continue to go straight into the market's price action this particular time, and we will begin our conversation by looking at the bigger pictures first. So when we are speaking of a bigger picture, there is absolutely nothing big right now than commodity play and the the energy sector. So what is happening in the commodity space? Can anyone help me to explain what is happening in the commodity sector? Why have we seen such a massive rally in gold price? Because right now in front of you, you have a monthly chart for gold prices. If you have seen any of our daily videos on our YouTube channel, or if you have been following up on my Twitter account, you must know by now that why and what is exactly going on over here and on the back of that. So people are coming up with few answers, and some really great answers, I must stress. What they're really referring to is that the gold prices have been rising because of the risk of rally. So what do we mean by that? How can we simplify that statement? So basically, for the last number of weeks, or since the invasion of Russia on Ukraine, investors have been very much jittery, or feeling, or have been in a risk off mode, and they've not been falling in love with the riskier assets, and that means equities, indices, or stock indices, and all of that. And what they have done, or where they have shown love, is of course for the safe haven asset, and gold certainly sits on top of that particular ladder. And then we see that is the reason that for the last 2 months, we have seen substantial gains for gold. And earlier today, I have done a technical analysis video on gold prices, covering that prices in a lot more detail. At the time when we did the video, the prices were trading in around that 2058 sort of a price level. And what we talked about at the time was that this is a great time for investors to look for an opportunity to short, because let's just move this one. So the price was over here, because previously the price was over here. This is your all-time high. The gold price was coming back into that particular territory. So we sort of formed a double top over here, one being over here, the other one being over here. So the opportunity was that, okay, perhaps we are not going to see a further reaction, a further momentum in terms of the price action from here to the upside. In fact, what we could potentially see a retracement, and that is what we have seen today. So does that mean the retracement in the gold prices, that the overall risk in the market has faded? Well, certainly no, but the biggest risk what traders have been looking at was the sanctions by the US on Russia on the energy sector. Now, hear me out for a little while, and I want you to pay full attention to what I am about to say, because these are very, very important factors that we are about to discuss. We have some serious problems heading towards us in the coming weeks or months if they are not addressed properly. Number one, and the most important one, is of course the stagflation. Stagflation occurs when we have a slower growth and a higher inflation. Now we are completely in that environment because even before the war situation, economic data started to come off its highs. The central banks were increasing interest rate. There was enormous amount of concern, enormous amount of concerns among investors and traders that we could potentially hurt global economic recovery. Now, the war has intensified that particular aspect because economic data so far has, I mean, obviously the data is not as real or as current as it should be. So far we have been getting the data from the last number of weeks, but now in the coming weeks we are going to see the impact of the Russia's war on the economic data, and that data is going to confirm that economic recovery has stalled or it is stalling. And inflation on the other side, with oil prices moving to new record highs and gold price sitting at its record highs, and then we have a nickel, we have other industrial metals hitting their all-time highs or near that particular factor. All of them are LSS such as like aluminium and iron, they are steel. So well, what they are really doing is they're pushing inflation curve further. Now, because of the sanctions on Russia and on the ongoing situation with Ukraine, now soft commodities are also very much in focus as well. Now, what do we mean by that? Now, obviously, Ukraine has been a major importer of wheat, and then, of course, aluminium, nickel, and other industrial metals been coming from Russia. And on top of that, you have your natural gas and your crude oil. Now, the fact that the war situation has disturbed the entire supply chain over here, we are going to see a period of a much higher inflation in the coming months. So the expectations, what the central banks had, that inflation is a transitory matter and it will come down very soon, and it did sort of started to come off slight bit from its high, is actually going to change its direction, and it is going to move higher. For instance, if you look at Apple, the recent event which happened yesterday, they've increased the price, and the price increased by exactly 7%, well above the inflation target. Now that means that you are going to pay higher for your iPhone. Every time you take your car to a petrol station or gas station, you are paying more for the same amount of liter of petrol in your car. That means less money in your pocket, or that means higher inflation because of the ongoing situation. Now that the same situation has actually started to take place at a government level, a panic has been triggered where governments such as China have started to secure massive quantities of wheat. Now, this has triggered a major concern among investors. Now, that means that the next time in the coming months when we be going to McDonald's to buy a burger, that price of that bun is going to shoot up massively, because if there are no appropriate supplies for soft commodities, prices will continue to soar. So all of that is a very major phenomena, which is going to give rise to stagflation, as I have written over here, and economic slowdown is also going to be the result of that. So economic slowdown is the second major factor which we all need to very much pay attention to in the coming days. So given the fact that yes, we are seeing markets moving into green territory today, but this rally could very much be short-lived because Russia hasn't completed its operation in Ukraine. Russia is still very much going ahead and in terms of its attack. The sanction situation isn't really fully done. These sanctions which are imposed on Russia in terms of the energy sector wasn't really well thought, because the US doesn't have appropriate supply of oil, and so is UK over here. And that means if we put sanctions on the gas sector, which is obviously moving massively to the upside, we will have a major problem in Europe. I am so sorry because I am just going very much on the fundamental sides today rather than doing the price analysis on the stocks. But I think given the fact that what is happening in the market, it is absolutely necessary for me to explain you guys what exactly is going on over here in this situation and how you could be positioning that. So for me, the current sell-off in gold is really a good opportunity to bag some bargain as the price comes down. I mean, of course, the better areas of support where we kind of wanted to buy these particular gold is obviously on the weekly time frame. I have drawn some really interesting price levels. So as you can see, let me just draw these ones. Let me just look at that over here. So what you see is on the daily time frame that we are looking at that 20-day simple moving average. This is your Bollinger Band over here. Let me get rid of all the writing from here and bring back the pen over here. This is the Bollinger Band over here, the upper line of the Bollinger Band. And then this is our first support zone, number one, as over here. This over here, this green line over here is your 20-day simple moving average, which is part of your Bollinger Band. The upper line over here, the lower line, the green line is over here for Bollinger Band. Or should we say this one is your Bollinger Band. This one over here is your 50-day simple moving average. This one over here in orange is your 100-day simple moving average. This one in a darker green, which is right over here, is your 200-day simple moving average. So although we are happy to take some risk as the price kind of reverses and comes back into this area of support, but important area or a better area of support, given where the prices have gone very recently, is right over here. So we would like to see the prices come over here and then double more or come at a bigger quantity. But the fact that what is going on in the markets and what is happening with the situation, gold prices may not come all the way to here. Hence, don't want to miss the opportunity. We wanted to try the opportunity at this particular level with it, and then what we would be expecting in terms of that is the continuation of the rally and where the price will actually take out this particular resistance zone to the upside, because we already have gone into this resistance zone number of times. So gold is quite an important commodity, an important derivative, an important instrument that you wanted to look at. The other one that we certainly wanted to look at in right now is, of course, your oil prices, because oil prices are certainly not at their all-time high. Again, we've done the analysis on this one as well previously. The all-time high in terms of gold prices were formed back in 2007. We are still far, but it is this particular area right over here which we kind of need to redefine that. So let me bring out that pen. And then what we are really defining that is this particular consolidation area over here. Now, because this is a resistance zone, for those of you who have attended the webinars or watched the videos before, you know that I like my resistance lines in red, because this helps me to identify on the time frame on the chart which one is my resistance or sell zone or my buy zones. So oil prices have reached that resistance zone over here. The other resistance zone is from 141 to 147. Prices are likely to stay higher or at the for a longer period of time. But the current sell-off which is happening today is only a short-term sort of an opportunity. So what we're really looking at now is moving our support zones to a higher level. So what we wanted to wait is for the price to come into this particular area of support right over here, and this becomes our support area number one. and this one becomes our support area number 2. So what we want is the price to bounce back from here and then break this particular price level, and that is very, very likely. It's very, very possible. Or if the price is not going to break this one, then we are hoping for the price to get into this particular zone, and then on the back of that particular zone we wanted to add at a higher position. So for example, if I was going to put a trade worth of $10,000 over here I'd be happy to put the trade at a $15,000 risk level or a 20,000 sort of a risk level, because this is a better level in comparison to this level. Now, of course, these are not the only price levels that we are very much interested in or we are looking at. We do have other price levels to look at as well, but those levels are not likely to come into play anytime soon, and that is where the 50-day simple moving average is trading on the daily time frame, that 94 to 98. Because if the price comes into this particular level, then that means that rally that we have been looking at in terms of the price action is actually very much over, and now the prices are only going to be moving to the downside. But again, the supply issues, depending what happens with Ukraine and everything else, is here, they are here to stay for a longer period of time. So I am not too focused on this one. The only two levels that I am very much focused under the current circumstances are resistance level number 1. If the price breaks out of this one, I wanted to take that trade. I wanted to target that as a next resistance, or I wanted to short oil prices near 147 sort of a price level. Now remember, depending on how bad the situation continues from here, oil prices can actually go to all the way to $200 or even $180 as well. Now, I know this particular webinar was supposed to be for about stocks, and now we are moving towards that as well fairly quickly. And let me load that profile up so that we can go into that profile and then look at what is happening with the stocks. Now, obviously, the stocks that which are very much under pressure given what is happening in Ukraine are everywhere. So for example, look at your Disney stock, right? Disney stock still has very, very strong fundamentals. Now, because of the overall sell-off in the market, the prices are dropping. The prices have been dropping since the price formed its all-time high right over here at that 203, and after that prices have been just very much following one particular trend. Now we are close enough to this particular trend, but again, whether I wanted to buy prices at this particular level, I am not entirely sure, because I think this particular pain in the equity market is very much likely to continue for some period of time. So what I really sort of wanted to do is I wanted to find extreme levels on the chart. So I would like to entertain the idea of buying between 126 to 116 only if the border stock market begins to show strength. Otherwise, we wanted to look at 99 to 103, or even around that 81 to $86 sort of price level. Bank of America. Obviously, this is a huge exposure because of the Russian bank cutting Russian banks from the current banking system, the SWIFT banking system, and that particular thing has triggered a massive sell-off in Bank of America's share. So Bank of America shares are in this particular area, which we have talked about previously many times. Now, still at this particular level, price has actually violated the low of this particular candle already, but we do have another level which is on top of a level over here, that 37. So what we're going to do is we're going to redefine this level a little bit. We're going to move this line like here over here, and at the same time we're going to go and we're going to find another important sort of a price level which we wanted to keep an eye on as well, and that particular price level is going to be between 32 to 33. I think this is a better level of support. Yes, the current level, if you wanted to take it, you could certainly take that as a support level number one. Put your stop loss below the lows of this particular candle if you are going to do that. And that is quite big stop loss really in terms of that. Otherwise, this is your support level number two. Remember, banks will have a favorable environment overall because the Federal Reserve is increasing the interest rate, but that increase in interest rate hike is going to be slow. But one thing that we want you to pay attention to is the 50-day simple moving average is about to cross below the 100-day simple moving average, which is a negative sign. But overall, the price doesn't really go that far below the 200-day simple moving average. The only time it happened that the distance between this, the 200-day simple moving average, which is a distance between here and here, was during the peak of COVID crisis. But obviously at that time, it was much, much bigger. And I think that this over here is possible given the fact if we continue to see situations like stagflation, and which is a real possibility as we explained before on the back of what is happening. Now, as for Apple, Apple came up with the new products. Inflation was very much the play in its focus among investors and traders. That is the major focus. Now, when we look at the Apple price action on the daily time frame, what we see is that Apple prices usually will fall by only a very small margin, not by a bigger margin, but only by a small margin. The last time the Apple price fell below its 200-day simple moving average was right over here, and that was back over here in 2020, right? And there wasn't that much. Now the prices have started to tickle lower. Prices are coming near their 200-day simple moving average. That 200-day simple moving average is an important price level in terms of the price action, or in terms of what is really happening in for the price. So what we wanted to do is we wanted to stick to this particular price level, and we wanted to now delete this one. This support zone is obviously being violated, and then now we wanted to focus this area as an important area of support. So we would like to wait for the prices to come over here. What about Twitter? Twitter is obviously had a big things going on with what's going on with Russia. Now, again, we're going to move our resistance and support levels. We're going to go right at the bottom of this particular consolidation area as an important area of support. So this area of support level where the prices are currently remains a valid level of support. We are okay to buy them at the current level because the prices are oversold over here, so that's okay. But an important area of support after that under the stagflation sort of a scenario is going to be between 16 to 18, and that is the area where we are highly interested. Otherwise, it is this particular area of that $20 to $22 as a next area of support that we are interested to buy as well. So now moving on to the next one, the looking at the GE stock. Again, this is a very much okay GE weekly. There's something wrong over here in terms of the Amazon daily. Let's look at the Amazon chart over here. Amazon also, if we look at the weekly chart, there hasn't been an occasion where the price has actually gone that deep towards this 50 to 200-day simple moving average on the weekly time frame. You can see that only over here during the peak of COVID crisis and back in 2018, price was kind of near its 100-day simple moving average, and over here it crossed below that 100-day simple moving average. But it was the distance at the time between the price and the 200-day simple moving average was this, and then which is pretty much the same right now over here. So where are our important support levels in terms of Amazon really is? So we, again, that stagflation sort of an environment is what we are very much looking at, and we want the price to come into this area of consolidation over here, just below that 200-day simple moving average, or we could just encompass that 200-day simple moving average over here and then bring this one just a little bit up. So still the prices are in a downward trend. We have broken this upward channel, which has been going on for a long period of time. Want the price, because price has already violated the lows of earlier this year, this year's low. Want the price to come into this area of support to really see some sort of a great price action to have. Now, unfortunately, we have come to an end of our webinar, which is a 30-minute webinar. Okay, so will quickly, very quickly run the Bitcoin aspect because we did promise that. So before we do it, because people are still asking about that. So BTC, what is happening with the BTC is a really good thing. Now the price has moved above the 50-day simple moving average. For me, that is a very positive sign. But what I want to see in terms of the Bitcoin price really now is price breaking above the 100 and the 200-day simple moving average, until and unless we don't see a move which is going to thrive and they're going to push the prices above that. Really, it is this area or even this area of support that we are very much focusing on. That double bottom is going to be in focus on. So for the time being, in short, yes, you could place a stop loss below low and then you can try to ride this rally. But remember, the two important further confirmation of a bull rally will only be once the price is going to be crossing above the 100 and followed by that the 200-day simple moving averages. All right, folks, that's all for now today, and I will see you guys next time, same place.